Joining me now, the CEO and President of FedEx, Raj Subramaniam. On the cusp of Investor Day, you're just issuing forecasts for your coming 3 years, showing some strong growth here, ambitious goals over these next couple of years. What gives you the confidence to issue the forecast?
Well, Morgan, first of all, it's great to see you again, and thank you for having me on the show. At FedEx, we have evolved our vision to make supply chains smarter for everyone. And this is a right time to have that vision. And we are undergoing a tremendous transformation at FedEx, which is three interlocking parts. It is the network transformation or digital transformation or organizational transformation. This makes us more resilient looking ahead, and this is the foundation that we are building off of. So when we look ahead on these projections, we are talking about a 4% revenue CAGR, pretty modest, but because of these transformations, this 4% drives 13 or 14% CAGR in operating income. And we also have a 200 basis point improvement in ROIC. And if you put it all together, that drives $6 billion in free cash flow. So we are very excited to be at this stage here at FedEx, especially building off of the great work that's already happened in the last 3 years.
Yeah, and you just touched on this a little bit, but how much of this forecast is a reflection of all the work you have done already? The cost cuts, the integration of your networks, the fact that you have this freight spin that's coming later this year versus a reflection of the macroeconomic backdrop and the industry conditions for parcel and freight?
Well, one thing that the last 3 years have taught us is that the world is an very dynamic place with a lot of changes. And we are focused on the things that we can control. And that's been the mantra throughout. And so a lot of these transformations have been, first of all, we have reduced our structural costs significantly. That gives us a lot of leverage. But we also proceeded with significant transformation of this company. So we are become much, much more resilient to deal with the external environment. And so we are counting on a little bit, but not much. And I think we are now heavily focused in on high-value industry verticals. That's a key part of our strategy, whether it is healthcare, whether it is automotive, whether it is the data center business, aerospace. These are the high-value things that we move through our system. We are the heartbeat of the industrial economy. So you put that together, you leverage our data and technology advantage, you talk about our transformation of our network and the more efficient way we are operating, we put it all together, we believe that we can deliver that 14% CAGR in our operating income.
Yeah, and I want to dig a little more deeply into that too. But first, just given what you have done to transform the network over these last couple of years, does it feel right-sized to you from an infrastructure standpoint, from an asset standpoint, or how are you thinking about that moving forward?
Yeah, no, what we began as a network transformation in the United States, which we call Network 2.0, we are about a quarter of the way there. So that's it's a very big transformation. We've taken it very patiently, making sure that our customer experience gets better. And by the end of this calendar year, 2026, we will be 65% of the way there, and we will finish it up in the fall of 2027. So we are on track for that. And that's, it's a very, it's been started off as an ambitious agenda, but it gives me great confidence that we've already delivered the results over the last few months. So that's a big deal. Along with, we have digital transformation underway. And then, as you may remember, many years ago, we used to be operating as multiple operating companies. Now we have one FedEx. So all those three things are underway, but many of them in early innings, meaning there's a lot of upside opportunity for us.
The digital transformation piece of this, I mean, you have partnerships with ServiceNow, you're working with Databricks. We talk so much about physical AI at the edge, automation. How does that factor into what FedEx looks like moving forward and what that means in terms of productivity, what it means for your workforce as well?
Well, that's a very big question. So it's a very important question as well. 5 years ago, I realized that we were sitting on intelligence of the world supply chain. Think about it this way, 17 million packages a day generating 2 petabytes of data. And a very important point I want to make here is that the only reason that we are able to have this is the hard physical work that we do every single day, meaning tech companies don't have this. It's the work that we do every single day that gives us the opportunity to play in this space. So you fast forward it, and now with the AI revolution that's come here, it is superpowers our data. So suddenly, our vision of making supply chains smarter for everyone becomes a reality. It starts with our own supply chain. We're using this to make sure that our route optimization is much better. We're using machine learning models to get much, much more optimized in our own flow of our traffic. But we are also using it to provide differentiation for our customers, meaning we are able to be much, much more predictive, much higher level of visibility, especially for those high-value customers like healthcare and the industrial economy, where this becomes very beneficial, and they create more business for FedEx. But the third element is also very important, because we have now created a unit called FedEx DataWorks, where we are externalizing these capabilities. And for example, we worked with Dun & Bradstreet, D&B, and we created this Retail Momentum Index. And interestingly, it predicted this week's retail release to a T, and it is a leading indicator. So now you can imagine how we can figure out a way to monetize that. We have internal capabilities like route optimization, like predictive maintenance, like customs clearance, which we can externalize. But the biggest opportunity of them all is that orchestration of global supply chains. There is $1.7 trillion of waste in global supply chains because of the lack of coordination across the different aspects of it. We can play a part in going up that value chain and generating value every step of the way. So this is a very important transformation, over the next 3 years. That's not dialed into any of the forecasts that we gave you. The work that we have done over the last 50 to 53 years to build this physical network now sets the stage for the next 50 years of FedEx, because now we are able to use that and create new value for our customers and all our stakeholders.
Yeah, 1.7 trillion. I mean, it's just a monstrous number when you think about it. I want to go back to the retail sales piece of this, because as you mentioned, you had retail sales that came in below estimates on the one hand. On the other, you have some GDP forecasts and readings right now that are suggesting we could be seeing upwards of 5% economic growth here for the fourth quarter in the U.S. What did you see in the holiday season, which of course is so critical for FedEx, the peak holiday shipping season?
Oh, we had a very good holiday season, and as I think it was encouraging to see how, first of all, our team members went above and beyond the call of duty in extremely tough weather conditions to deliver for our customers. So we had a very good holiday season. As we mentioned earlier in the press release, that we expect our Q3 to come in ahead of what analysts are expecting consensus for as of February 11th. But we will talk about all those more and more at the earnings call in March. And today's conversation was more focused really on where we're headed over the next 3.5 years.
Yeah. You also earlier this week announced that you're taking a minority stake in InPost in Europe. What does that enable, and why take an equity stake versus acquire it or strike a partnership?
Yeah, I think we have two goals here. One is financial goal. And it's a great company, and it is growing very fast. It is focusing on B2C, out of home, and 60,000 plus lockers in Europe, and it's fast growing with good returns. So that's interesting in its own right. From a strategic point of view, what this partnership allows us to do is focus FedEx on B2B, to be that heartbeat of the industrial economy in Europe. And this becomes a complementary setup where we have a partnership on B2C. And so we are very excited. We think this is the right structure to make this work. And, of course, after the deal closes, it'll be immediately accretive to the bottom line for FedEx.
What is your take on the industrial economy around the globe right now? There's been so much focus on a recovery or rebound or anticipation of one in industrial activity.
Yeah, no, I mean, if you look back over the last 3.5 years, the ISM index has been below 50 for, I think, 33 of the 35 months, something like that. And then we had a good reading in the month of January. But I think now, with especially, of course, the healthcare sector is very big, and we can play a unique role in that. The data center business. Can you imagine? When all these investments that is happening in data center, there's a lot of supply chain elements involved in moving those goods to make that work. So that we want to be in the middle of that. Because we're uniquely positioned to do that, and around the world, by the way. So we see, interesting opportunities here, and that's why I think I'm confident that, we're talking about modest revenue goals going forward for the next 3.5 years. But I think powering up that industrial economy, going up after the premium segment of the global air freight market, those are the kind of things that'll help us achieve our goals.
Have tariffs and I'll call it evolving trade policies and emerging trade deals, have these been a headwind or a tailwind for FedEx?
Well, if you think about it, the dynamism of the global and trade environment has been just, out of the ordinary, let's call it that. I've been in this business for 35 years, and I have never seen a trend change like we see it in the year 2025. And I think we are moving from one equilibrium state to another, and we are right in the middle of that transition. And just the last year alone, if I look at our own trends, our U.S. exports was up and U.S. imports was down. Those combination of those two things I've never seen in my career. So it's from a FedEx perspective, 70% of our business is in the United States. The U.S. consumer is the strongest economic force on the planet, so we are extremely well positioned there. So let's start there. But having said that, we also have a tremendous global network in place, a scaled physical network in place, and supply chain patterns are changing everywhere. It's changing completely everywhere, and the fact that we are already here, there, and everywhere means that we have a scale advantage here. The other thing you should remember is before customers move their supply chains and move their production, they talk to us, the logistics partner, so we get the intelligence well ahead of time. So for us, we have to stay nimble and move and make the right amount of investments and to complement our network that we already have, which is exactly what we have done. In the last 6 months, we've made significant moves in Osaka, Japan to re-platform our facility there. We have made moves in Vietnam. We have made significant moves in India. We have launched our flights to Riyadh. We've opened Dublin. We have opened a facility in Istanbul, in Chile, on and on. And this is, this represents a great opportunity for us. In fact, in our projections, you will note that we expect to improve our international operating margin by 440 basis points in the next 3.5 years.
And finally, to just circle back on the freight piece of the puzzle, you note in the release that you're on track for that spin to happen in the beginning of June as well. Just how to think about these two companies moving forward once that happens.
Well, that's a great question, Morgan. I think it's wonderful. We have the opportunity now to create two incredible companies that serve customers extremely well and create value for all our shareholders. I think FedEx Freight, if you think about it, it is the largest LTL company in America. It is the only company that offers priority and deferred services across the country. It is an outstanding unit. And with now dedicated focus on FedEx Freight, it improves, it is the opportunity now to improve customer experience and technology. So I'm very excited about what's in store for FedEx Freight. It'll be a great company. It also will have two great companies with now FedEx, and with the opportunities that we have identified in our own projections for CY29.
Raj Subramaniam, FedEx CEO. It's great to speak with you. Thank you so much.
Thank you so much, Morgan. It was great speaking with you.